Anuj Talwar, Joint MD of Talbros, is here to talk more. There's a sharp jump in your profitability with very reasonable top line growth as well, Anuj. What's the kind of sustainable numbers are you looking at from here on?
So good afternoon and thank you for having me on your show. Yes, we had a very strong quarter in quarter four and had a good year. I think this will be sustained going forward. We're looking at about an 18 to 20% growth in the top line in this financial year as well.
So 18 to 20% top line growth, but what about the margins? Are you looking at northward bias to that as well? Because currently it's been around that 14% range. Do you expect it to hit maybe the 15-16% mark?
Yeah. If you look at our product mix is very favorable. So we supply to every segment in the country, and we also do about exports about 25%. This also enhances margins. Yes, you're correct. We're looking at about a 15 to 16% EBITDA margin range going forward. We're quite bullish of the orders that we have already contracted, and they will all be adding to the top line as we move forward.
The contribution of the EV in your top line growth going forward, because right now the contribution is quite insignificant, right? What could it scale up to? What kind of potential do you see in the EV vertical?
So we've done an analysis. Currently our EV penetration is only about 2%, but going forward, we look to double our turnover from about 1,000 crores to about 2,000 crores in the next 4 years, and EV on a higher turnover should be about 12%.
If this contribution goes up, does it also improve your profitability profile overall and your margins? Because given that it would impact the overall blended margins positively?
No, like I said to you, that because of the fact that you're in every segment possible and you're moving towards export markets, and we're going to export about 35% in the next 4 years, EV penetration. So yes, margins will go up. As I've already mentioned to you, that around 15 to 16% EBITDA margin is what we're looking at.
The capacity expansion plans, and since you talked about exports, give us a bit more color in terms of what has been the new client addition or logo addition. What kind of order is there in the pipeline?
So we've added a new customer base in the US. We've added a new customer base in the UK. We've added people from the marine line. We've added new car manufacturers in the European region. We've added new off-highway construction equipment manufacturers in the UK. So with this whole China Plus One strategy happening, we're getting a lot of traction for exports as well.
Okay, so
Anuj, like I mentioned to you, that we're looking at about increasing exports to about 35% by 27 on a turnover about 2,000 crores at that point in time.
I'm thinking, I would just want to understand 15 to 18% growth. Are you being conservative? Because many of your clients themselves are talking about 20% and upward, and the sector is coming back after a long while. Would you raise your guidance mid-year?
18 to 20% is what we're looking at.
Okay.
You're correct. I think because we also do a lot of exports, Europe is still not very clear at the moment, but in India, the CV space is looking very good. Two-wheelers are looking good again. EV is very strong. We are, pretty much everybody in the country, Tata Motors, electric, Tata Motors, combustion engine, Maruti. So 18 to 20% is a good range overall. But there are certain division of ours, like the forging division or the chassis division or the rubber division, which are going to grow at about 30% plus. So overall is 18 to 20%.
That note, we let you go. Really appreciate you making time and speaking with ET Now today. So a decent top line growth is what they're expecting, 18 to 20%, targeting margins of around 15 to 16%, and see a lot of headroom available when it comes to the EV segment as well.